So what I'm going to talk about today is why is psychology such a big thing in trading, and why I believe it is because every day in the market it is going to be different. Every time you trade, the market will be different. So you cannot have a strategy which is just pattern trading. So say if you have your model and you only trade it when you just see it happen, because if you take it without any conviction, or if you don't have your drawn liquidity, and or you take a trade against your drawn liquidity because that setup has formed and you just pattern trading it, then there's no real reason for that setup to work. There's no conviction of, oh, I know why this is going to go there. Instead, you're taking a trade and thinking, oh, my model has formed, so I'm just going to take it. And I don't know if it's going to work out because I don't know where it's truly going. So, and the reason why I think it's such like a psychology thing is because it's like day to day life. Every day in your life is going to be different. So it all comes down to you, how you see that day, how you're going to set up that day to be the best, most disciplined, most patient day for you. And that is why your day to day life correlates so much with trading, because it all comes down to what you do, which is then how you will trade in the market. So it's having that structure, having that discipline, having the routine in your life that will make you grow as a trader. Going to the gym, having good cardio, having good mental resilience, being able to say no to something. Because if you see your trade happen in the market, your setup, sorry, say if a news event has taken out Asia highs and it's into a daily 4 hour, 1 hour, and then has a strong move to the downside with an hour FEG, whatever. And then there's a lot of low resistance lows. There's previous day low. There's um, London lows. And you then see your trade or your model form to the upside, to the high, which has done all the damage and which has done the true move. Um, and there might be SMT on that high as well. And you just take your trade to the upside because your model has formed. You're just pattern trading it, maybe because it's tapped into I don't know, some random 15-minute FEG from ages ago, which has already been invalidated. Then you have no, you don't know why or where price is going to go after that, because you're only taking it because you've seen that pattern, you've seen that trade happen, when price realistically most likely will not end up going to that high, because that is a high which has done all the damage. And if you were then patient enough, if you were disciplined, and 10 minutes later you didn't take that trade because you know that where you want price to go, and you will only take that trade if your setup forms to where you want it to go, then that's where being patient and disciplined comes in, because you've had resilience, you've said no to that, and then you've waited for your setup to form in the correct direction which you want. And then you can then be more, if that trade loses, you can be more accepting of that, because you know that you've had your drawn liquidity, you've had the reasoning to why that trade should go there. And if it does lose for whatever reason, then you can be happy with yourself that you've done all the correct stuff to then grow in the future as a trader. You've done everything that needs to be done for you to only be taking the true setups that form for you. So that's why psychology is such a big thing, because it's the little things of, oh, should I? It's not even a little thing, but it's it's withholding that temptation to, oh, I've seen my model or setup form here, but I have no conviction really in it, through market experience, through time on the charts, whether it's back testing, whatever. If you haven't started, if you've started recently, it'll most likely be back testing, but you should know when price looks more probable and when it doesn't. So yeah, it's all that's the psychology bit. That's where it comes down to you in trading, because it's so, well, if someone's trading the same setup as you, same model, whatever it is, they, in that same day you're trading, they can take a complete opposite trade to you, and like that's why you can't pattern trade it, or you can't. That's why it's you as the trader who makes it successful, because the fact that you both know the same knowledge, but you can see something different to someone else, that's where you individually need to be the best that you can be, in the sense of waiting for that correct model. Because if you're just taking any setup that forms, then that is going to ruin your probability over time, because then you're going to think that good trades are good trades when they're truly not. Just because it's a good trade according to your setup, it's met your criteria of tapping an hourly on, then you've got an inverse, or you've got CISD, or whatever it is, breaker, and you're just trading off what you see off that and not where you think price is going to go, because that's where the main draw is, and that's what will pull price to that place. Then that's where you become better. That's where you start to elevate in what you see. So just don't focus on, like, don't focus on what price is trying to, like, manipulate you into doing. Because if you give in to that temptation easily, if you give in to that little thought in your head, oh, I know I shouldn't really be taking this because I don't know where price is going to go after, then that's what will be affecting you. So I hope this helps with you understanding somewhat what more psychology is in trading, and I hope this helps a little bit. God bless.